You guys have been asking me for a long time to opine on the chip makers, and I've been doing a lot of research into this industry. And my favorite chip maker in this environment is Nvidia, the industry leader, especially in the GPU space. And so I want to dive into this company, but first, let me run the intro. What's up, guys? You guys have been waiting for me to talk about chip makers for a long time on this channel, and of course I got 3 that I'm going to talk about back to back to back. So the first video is my #1 chip maker, which is Nvidia, and in the second video, which will be released in a couple of days from now, you're going to get AMD, and then after that I will talk about Intel. But let's dive right into the Nvidia video. So you can see that of the Wall Street analysts that cover Nvidia, 24 plus 8 or 32 have a buy or a strong buy on this name. 12 have a hold. There's very few analysts. In fact, there's just one that has a sell on the name. And so why is Wall Street really bullish on this name? Well, the first thing that I do want to point out is that Wall Street's bullish on the name despite the fact that the shares have declined 60% year to date. And their 1-year price target is still high relative to the current share price, but note that how much it's come down in fiscal year 2022 as the share price has come down. And that price target of $207 per share is still approximately 60% higher than the current share price close. And like I always like to remind you guys, don't pay attention to all of Wall Street's buys and sells, but whenever Wall Street has a buy and a price target that's more than 50% of the current share price, that's a screaming buy, and that's something that you guys got to pay attention to. Nobody's closer to these securities than the Wall Street analysts that cover them. But the obvious question that I got to ask is, how is it that the shares of Nvidia are down 60% when so many analysts on Wall Street love this name? Well, you can see that it's the economy, stupid. Semiconductor demand slides for the second consecutive month in 2022. And the reason why the demand is sliding is because of the soaring cost pressure from interest rate hikes by the Fed, and of course the supply chain issues, which has caused the price for these semiconductors to skyrocket. And Citigroup analyst Christopher Danley told Bloomberg they remain cautious on semis and believe this downturn is similar to the 2011-2012 downturn due to 3 items. The first is multiple contraction, the second is demand contraction, and the third is inventory correction. And so the way I like to think about that is that the multiple contraction is of course led by the demand contraction and the inventory correction. Look, the inventory correction will eventually resolve itself. The demand contraction is the one that will take some time. However, if you wait until things sort of get a little bit better before you buy into the security, you might miss the surge in the share price. And so the way I'm looking at it is I'm forecasting out the long-term performance of this company and determining if it's a reasonable discount to its intrinsic value. And that's what I'm going to provide to you by the end of this video. And you can see that that slowdown has been affecting Nvidia. Look at their Q2 2023 financial summary. Revenue was up year over year, but there could be challenges on the horizon. Notice that their gross margin is down considerably. And the reason why their results are a bit challenged in this environment is, of course, the gaming segment is declining. Gaming has been 1/3 of their revenues this year, although gaming is their largest segment. And what's really happening is that the channel inventory is being corrected right now. Now, like I said, this will fix itself, but it will take some time. Now, notice the data center, which is their second largest segment, is up 61% year over year. And so keep an eye on this segment because Nvidia is designing the future. And so when I mean data centers, I mean cloud computing. And so if you believe in the cloud, Nvidia is a great way to invest in it. And I'll show you later how their customers include all of the major cloud providers. And I do want to point out their automotive segment. Its revenue is up 45% year over year. Now, although this segment is very small, it's like 2% of their overall business, this could become a very large segment of the company. And I'll talk more about that later. Now, here's their outlook for fiscal year 2023. Now, notice that despite the fact that they are having some revenue declines, they overall expect largely flat revenue growth, and note that they finally started paying a corporate tax rate at a rate of 9.5%. Notice in previous years they actually haven't been paying tax. So when you forecast out results, you gotta forecast out a tax rate. And I've been forecasting out the full tax rate, which might mean that my valuation model might be a little bit pessimistic. And just going into Nvidia at a glance a little bit, just describing the company, because not everyone watching this video has done a full amount of research on Nvidia, so I do want to help you there. Nvidia's been around for a long time. They IPO'd in 1999, and of course you guys know that they're known for their gaming GPUs. And in fact, I actually, being a gamer, when I decided to create a YouTube channel, I actually purchased a laptop with their gaming GPU, which is referred to as a GeForce, which is their top of the line, because I wanted solid rendering speeds when it came to rendering my YouTube videos. And I can actually render 20-minute videos in under 4 minutes. And so that's how strong these things are, and why Nvidia has a strong toehold on the gaming sector. But in the AMD video, which will come out in a couple of days, I will explain to you why AMD is actually catching up and will provide some competition in the future for Nvidia. And here are their core segments. So you can see that gaming is approximately 46% of their fiscal year 2022 revenue. It is their largest segment. Hot on the heels of their largest segment is the data center. I do believe that the data center, or the cloud business, will make up the largest portion of their revenue into the future. The professional visualization segment, although it's only 8% of their fiscal year 2022 revenue, remember, the professional visualization is that sort of like 3D design, augmented reality, virtual reality, AR type of virtual world workloads, the Omniverse enterprise software as well. And you guys remember from the video that I did put out on Meta, that Meta is making a huge leap into sort of the augmented virtual reality world. And so who better to power that world than a company like Nvidia? And so although this professional visualization segment is only 8% of their overall revenues, I do expect this to continue to grow, because this segment is really geared towards the metaverse. And so far I've explained to you that they're future focused in the gaming space, in the cloud space, and in the metaverse space. And then they have one more area where they're future focused and driving into, and that is on the far right, the automotive segment. Look, guys, I actually believe that the automotive segment of their business will probably become the second largest segment of the company overall. At the end of the day, how much do we spend on gaming relative to how much do we spend on buying our cars? And because cars are getting more complicated, there's a transition to self-driving, software, new hardware, new sort of techs, gadgets, and desires that are going into new cars. You can see this segment absolutely exploding, especially in an environment where the automotive manufacturers have been sort of restrained with the number of chips that they have access to. Look, there's going to be a glut in this space, and so with the glut, the way that you're going to generate high margins is by providing the latest and greatest, and Nvidia's really structured to provide that, because they only design the chips, they leave the manufacturing up to Taiwan Semiconductor. I do believe that that's the reason why Nvidia and AMD are going to be successful in the near to long term, and guys like Intel are going to be left in the dust. Now let's go back to the cloud computing, the data center space. You can see that they have every major cloud provider as their customers. So they got Alibaba Cloud, they got Azure, they got Google, they got AWS, they got Baidu, Tencent, IBM, and Oracle. And notice that their share of the top 500 systems in fiscal year 22, or actually in 2022, is 71%. So they're gaining market share in the top supercomputers, and that's what you want to see. And that's why I do believe that the data center is going to be their largest segment in the future. Now, just moving into the gaming segment, the GeForce is the world's largest gaming platform, but I do believe that these near-term headwinds will subside, the inventory correction will occur, and the price of making these products will go down as the supply chain issues go away. And so I do believe that their number one share in the PC marketplace with an 80% market share will remain. But once again, guys, be very careful, because AMD is catching up. I do believe that their number one share will dwindle a little bit. I think that 80% market share might go down to around 70 to 60% with AMD picking up some of that market share. But if they price themselves accordingly, they can maintain that 80% share. It's not like AMD is going to try to price themselves out of oblivion. And so I do believe that Nvidia will continue to maintain their stronghold in this environment or in this segment, but pay attention to what AMD is doing. Look, worst case scenario, you can just buy both companies and then it doesn't matter who wins in the gaming space. But I do believe that Nvidia will continue to win into the future. And in the professional visualization space, remember guys, it's really hard to tell where AR and VR will end up, but notice that they're effectively telling you that there's 70 plus applications that are unlocking new markets, and there's more to come, especially with Meta diving strong into the metaverse segment. And finally, in the automotive segment, notice that they have 87 partners as it relates to software, 50 partners as it relates to sensors, and 48 partners as it relates to car makers. So effectively every car maker. And so as autonomous driving builds out, which is effectively the new internet, Web 3.0, as Alibaba has described in their investor day, Nvidia will be an integral provider of products in this segment. And so that's why I do believe that the automotive segment will grow to be one of their more important segments. And this is why they're highlighting it right now, despite it only being 2% of their revenues. I do believe that there's a lot of secular tailwinds helping them here. So overall, what am I telling you? I'm telling you that everything that Nvidia is focused on is future focused and it's growing heavily. And this is why I believe that Nvidia is the number one choice for me and my portfolio in the chip maker space. Now, the first area that I want to show you in their financial statements, this is the model that the Patreons get access to, is their cash flow statement. Notice that their cash from operations is very high, and look how low amount of that is going to property, plant, and equipment. And the reason for that is because they expense all of their development. That's really good because it allows us to forecast out this company using free cash flow as a percentage of revenue. And notice that all of the cash flow being generated is being reinvested into the business, and they're growing out the business very profitably. And when I say that they're growing out the business very profitably, there's two metrics to look at. The first one is free cash flow as a percentage of their revenue. Notice that the free cash flow as a percentage of their revenue has been increasing. It doubled from 2013 at 15% to 2022 at 30%. That's huge, but you also want to look at operating margins and gross profit margins. And so that's next. So you can see here that profit margins and operating profit margins have been increasing. And so notice that in 2013, their gross profit margins were very healthy at 52%. But notice in 2022, you're up to 65%. Same with operating profit. In 2013, it was 15%. And now in 2022, it's up to 37%. So as the company is growing, their offerings are becoming more valuable in a very chip-hungry world. And this is how I'm forecasting out the company. Notice that I'm breaking out their two segments. So they have their graphics segment, and then they have their everything else segment, which is the compute and networking segment. And so although the graphics and compute and networking segments both grew at around 60% last year, for fiscal year 2022, I'm being very pessimistic here, and I'm growing these segments out at 5 and 15%. In 2023, I'm going to increase the growth rate a little bit at 10 and 20%, but overall, I'm growing revenues at 14% compared to 2022's revenue growth rate of 61%. So I'm being quite pessimistic here. And so noting the extreme secular tailwinds for the industry, although I'm being very conservative with my valuation and growing revenues at arguably low rates, I'm also keeping the operating margins at a low 25%. So there's a lot of pessimism being built into my model, not just on the top line with revenue, but also on the bottom line with the margins that I'm giving them. So guys, keep aware of that. And so when you build out your models, you might want to at least give them slightly higher operating profit margins than I'm giving them. But the reason why I'm doing this is to prove a point with the valuation. And so before I get into the valuation, please note that approximately 80% of the watch time on this channel is coming from people that are not subscribed. So please, if you have the opportunity, subscribe to the channel. Now let's go right into the valuation. So you can see that using a low terminal multiple of 20 times earnings, I do believe that I should probably be using 25 times earnings. I'm giving them a valuation of approximately $200 per share. Compare that to their current share price of $121 per share. This company is trading at approximately 60% of their intrinsic value. And I absolutely love this business. It's getting very close to trading at approximately half of its intrinsic value. And I would love to own this name under $100 per share. And so the question is, How do you get access to that valuation model where I did a lot of work on Nvidia and their prospects going into the future on a granular level? Well, you can get access to that model at the lower tier of the Patreons. And if you want to join us for an epic live presentation, you can join us at that higher tier. I did talk a lot about their augmented reality and their virtual reality business. And to get a flavor of how much is being invested into this world, take a look at the video that I recently released on Meta and how they discussed the augmented reality world in their Q2 conference call. And so to get access to that video, click right here.